Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and Palantir Technologies PLTR stock. We're going to start off the video talking about how Sofi has recently announced a multi-year contract and partnership with a quarterback from the NFL who plays for the Los Angeles Chargers named Justin Herbert. This is not only going to give them fantastic publicity, but it's also going to allow them to reach the gigantic NFL economy through very intelligent marketing. Hopefully, this is going to reflect very positively on their overall revenues and potentially their stock price, so stay tuned for a news update on that. Then we're going to talk about 3 reasons to buy Palantir Technologies right now, according to this particular author, who is a bull in regards to Palantir Technologies. And then lastly, we're going to be going over an article that says why I just doubled my Palantir position. Now, for this article, we're only going to be going over the summary. However, in the first article, we are going to be doing an entire article analysis. But if you want more information on any of these articles, remember to go down and click that source button in the description to read these articles for yourself. But for more videos on Sofi Technologies as well as Palantir Technologies, remember to go and smash and obliterate that like button, which tells me that you all want more of these types of videos. Don't forget to also subscribe if you are new, comment your thoughts down below about Sofi and Palantir. Remember to practice proper risk management policies by not overexposing yourself to too many single risky growth stocks that we talk about on this channel. And without further ado, let's jump right into today's stories. So we're going to start off with Sofi Technologies, ticker symbol SOFI. Right now, Sofi Technologies trades at $6.08 per share, while stock professionals believe the company is worth anywhere between $7 and $11, which currently indicates that right now it could be technically viewed as undervalued. Sofi Technologies is a fintech company or a financial technology company that offers a digitalized answer in the form of an app to help their consumers with personal finance by giving them access to financial services and or financial products. And recently they announced a 3-year-long partnership with a quarterback in the NFL who plays for the Los Angeles Chargers, and his name is Justin Herbert. Herbert will also receive equity stake, and he will appear in Sofi Technologies' newest ad campaign, which will also be aired on television. Sofi Technologies was one of the top searched brands during the Super Bowl of last year when they launched a very successful campaign about breaking up with bad banking. Sofi and this NFL quarterback will continue to try to reach and help NFL fans to educate them about finance, tell them to pay off high interest debt early, how to invest properly, and hopefully reach financial independence so they can realize their overall life ambitions. According to this article, the NFL quarterback says, and I quote, "Given our shared values and the fact that I am already a Sofi member, I'm thrilled to partner with Sofi in an official capacity to help guide myself and others to financial success." He goes on to say, "In order to set myself up for success, both on and off the field, it's critical to build and maintain great relationships, especially when it comes to my finances. It's great to have found a partner in Sofi, and I look forward to all that's to come," end quote. In response to this NFL quarterback and the fantastic relationship between Sofi Technologies and the NFL, Lauren Stafford Webb, who is the chief marketing officer of Sofi Technologies, said this: "For those who feel like their financial priorities and their bank play for different teams, our latest brand campaign is encouraging our members to get off the sidelines and take action toward their financial goals. We are excited to evolve our breakup with bad banking campaign and continue to help members get out of unfulfilling banking relationships and move on with Sofi." The CMO goes on to say, "Justin Herbert is the perfect partner to bring this initiative to life because he understands the importance firsthand of taking charge of your financial future. We look forward to this partnership with Justin that will allow us to help more fans continue to get their money right for years to come," end quote. And overall, I think, again, this is fantastic publicity. It's a great marketing move for Sofi Technologies, and Sofi also owns the stadium, which is the home stadium for the Los Angeles Angeles Chargers, which is SoFi Stadium. Like I said in a previous video, this same stadium will be used to host the Olympics sometime in the future. SoFi also really pushes their competitive advantage by offering a higher APY in their checking and savings accounts. For instance, if we look into SoFi's checking and savings, they have a gigantic competitive advantage. SoFi allows various members to earn up to 2% APY cash back if you hold money in their checking and savings accounts, and that is 60 times higher than the national average, which means they clearly beat out the majority, if not all, legacy banks that I can think of off the top of my head. This means that if you have $100,000 with SoFi in a checking or savings account, they are going to be paying you $2,000 per year just to hold your money with them. Also, for their members who don't have direct deposit, all of their balances will be earning a 1% API, which is still 33 times higher than the overall national average. This is also very good because as inflation increases and as the Federal Reserve tries to increase interest rates and the prime rate to get inflation under control, SoFi Technologies as well as other financial institutions will actually increase their various interest rates to offset some of that risk, which means that their net interest income will absolutely skyrocket. So you might want to look into legacy banks as well as very innovative fintech companies such as Sofi Technologies, because remember, Sofi Technologies operates as both a bank and a fintech because they have their own bank charter, along with a plethora of other fantastic acquisitions that we've talked about with their Galileo and Technisys platforms, which gives them a huge technical competitive advantage in the market compared to other fintech companies and or legacy banks. Now let's move on to the latest news updates for Palantir Technologies and their PLTR stock. Palantir Technologies, if you didn't know, is a big data and analytics company that serves both commercial clients as well as government enterprises. And this article written by the author on screen, Samuel Smith, we will be analyzing today because I think he brings up 3 really good reasons. However, I'm going to be more of the voice of reason in this particular article because my personal analysis says to hold a Palantir Technologies right now, not to buy any more or sell any. So we're going to dive into that. Right now, the PLTR share price is $7.46, with professionals believing the company is worth anywhere between $6 and $20 per share. So clearly, the current stock price is trading below their low-end analyst price target of $6, which means it's already trading at the lower end of the spectrum, which means it could be a good buying opportunity. And the author of this article really thinks so because he has a strong buy rating for this particular stock. Palantir Technologies has a cult-like following very similar to Tesla. Now, I personally also like this company. I own some of this company. However, like I said earlier, my risk management policies don't allow me to invest into a single risky growth stock more than a 5% initial portfolio allocation. That would mean if my portfolio is $100,000, I'm only allowed to use $5,000 to dollar cost average into the PLTR stock. I also want to highlight that the stock price has dropped significantly ever since they DPO'd, which is their direct public offering. I also want to say that it has not been all rainbows and sunshine because the company has experienced various headwinds, which would be the general overall market crashing, investors liquidating their high-growth speculative technology stocks, which would include both stocks like SoFi as well as Palantir. We also know that Palantir has very high stock-based compensation, which we have already discussed in a previous video, and they had somewhat disappointing quarterly results for this year. Now, the main thesis for me in this video is to tell investors to not pay attention to the stock price necessarily, but rather the core investment thesis and the company fundamentals. In this video, the article lays out 3 different reasons which say that the PLTR stock could generate significant returns and stock price appreciation over the next decade. However, you're going to have the stomach and the overall investor prowess to hold the company even while it's crashing. Even if the stock goes as low as $4 per share, for this investment thesis to work, you're just going to have to hold through it because eventually it is set to bounce back. And because no one can predict when exactly it will be able to bounce back, that's why you just have to hold for the long term if you believe in this company. Now, if you don't believe in this company, then feel free to liquidate your position, move on to the next hype stock, and you're probably going to get hurt that way. Also, again, I want to really push proper risk management. Do not put all of your eggs in one basket, at least that's my opinion. I would rather be very diversified in all sectors, which prevents my portfolio from losing money unnecessarily. Also, if any of the companies that I invest into, of the 20 companies that I really try to invest into along with my core holdings of ETFs, mutual funds, and index funds, even if one of my single growth companies goes out of business or even their stock goes to zero, I am not even going to feel it in my portfolio. So to me, only betting on 1, 2, or 3 companies takes on way too much unnecessary risk. But without further ado, and with that disclaimer, let's dive into the 3 reasons. Reason number 1, the article author lays out, it's that Palantir's total addressable market is absolutely gigantic and it's continuously growing. Back when Palantir went public, their overall addressable market was approximately $120 billion. He says that Palantir provides a great company to utilize and take advantage of a very long growth runway due to their gigantic total addressable market. To put this into perspective, the company's addressable market is basically like a big pie, and Palantir is trying to steal a slice of that pie, either that has been untouched by other competition, or even if current competition has a larger slice of the pie, Palantir can try to steal that part of the market that's already been claimed, or start gaining market share that hasn't been claimed yet. In the long term, I think Palantir is going to utilize and be very innovative and grow their stock as well as their company very impressively, especially if they continue to evolve and create new products to meet the quote-unquote insatiable government and corporate demand for data analytics. Palantir is a big data and analytics company, which means they are attracted to the big data and analytics industry, which currently is growing at a compounding annual growth rate, for shorthand it's called the CAGR, of approximately 20% from now till 2030. Analysts anticipate that Palantir's total addressable market will grow from $120 billion from when they DPO'd all the way to $230 billion by 2025. They also anticipate that by 2030, the total addressable market for this company is going to be approximately around $600 billion. This means that over the next decade, or even less than the next 10 years, this company is anticipated to, at minimum, if they even track with the market, grow at a 20% compounding annual growth rate. Right now, management actually thinks that the company is going to be growing at a 30% compounding annual growth rate. However, due to recent earnings reports and financial results, I don't think that's actually going to be happening. I think a 25% growth rate for the year of 2022 is probably going to be more accurate. Also, I want to say that Palantir is anticipated to generate $4.1 billion in 2025, which means that they are currently only utilizing and have only claimed 2% of their overall addressable market. This means that Palantir has a gigantic growth runway to eventually take advantage of. Now, right here, I want to briefly stop to tell you why this has a catch. For instance, right now their market cap currently comes in at around $15.47 billion, which means that even in 2025, if the stock price does not move at all from $7 and around 50 cents, that means they are still going to be trading at around a 4 times PS ratio, or price to sales ratio. That means in the next 3 years, this company is going to be extremely volatile depending on their overall financial results quarter over quarter and year over year. So that is one caveat that I want to make investors aware of. The next thing we're going to talk about is the author's number 2 reason to buy Palantir Technologies, which is their Gotham business, which has an extremely wide moat and very aggressive growth. If you didn't know, their Gotham platform is meant for the US government as well as the US government allies. Their management even stated recently in an earnings call that Palantir's ambition is to be the 6th largest contractor for the US government. And this is not a general contractor, this is a prime contractor, which means they are competing with companies such as Raytheon as well as General Dynamics. Now, I'm not going to read the whole quote right here. You can do that yourself, or you can just read it on screen. But I think this is a phenomenal goal. Another goal of theirs is to become the default operating system for the entire United States government, which is going to be absolutely crazy. The author of this article is extremely positive and bullish on Gotham's Gotham's long-term outlook. And remember, Gotham is their government platform for big data and analytics and decision making. And right now, Palantir is quote-unquote obsessed with winning the artificial intelligence race in the United States. We also know, looking at other defensive contractor primes, such as General Dynamics and Raytheon, that these companies are budget-driven, not profit-driven. What does this mean? In other words, it means that there is a very high priority to have the newest and best system, even if it doesn't give you profit, and means that the government is going to pick you and adopt your technology, which is going to potentially lead to other bigger, larger contracts. So it's technology first, money later. And because Palantir already has a great relationship with the United States government, I don't think this is very far off. Also, I want to point out that their technology is extremely secure, and I'm very bullish on their overall future projections. Now, the bearish naysayers and critics will point out correctly that their government business segment has actually decreased and decelerated to 27% in regards to the revenue growth in quarter two. And that is a big Debbie Downer, because at minimum, we would want to have that at around or above 30%, because their management dictated a 30% CAGR in terms of their overall revenue growth from now until 2025, and clearly, as of quarter two, they are not meeting that expectation. However, management remains very positive and bullish on the long-term growth trajectory, and they have iterated and reiterated that multiple times to their investors, that they as a company are a long-term investment opportunity, not a short-term investment opportunity, which is why I really push long-term buy and hold strategies, because in the future, this company could be absolutely fantastic. Lastly, the author's point number 3 is that the stock price looks very cheap right now. Palantir's stock price has basically never been cheaper trading in this particular range. Now again, I do have a caveat here. Just because Palantir is trading at a giant discount from what they were trading at, it doesn't necessarily mean that Palantir is a good buying opportunity right now just because their stock price fell a lot. We need to look at their accounting ratios and other financial ratios to determine if they are a good buying opportunity. In past videos, I've gone through these ratios and communicated that even now at $7 and approximately 50 cents, Palantir is still trading at a premium, which means it's not fairly valued and it could definitely fall even lower. Now, that doesn't mean that we shouldn't buy the company, but it does mean that you need to adjust your overall time horizon of how long you plan to keep this company. For instance, the higher the stock price you buy it at, the longer it's going to take for this company to appreciate just for you to break even, and then from that point on, then you're going to start creating profits. Some investors try to fix this problem by dollar cost averaging and lowering their overall average cost basis. Now, the problem with this is I find investors tend to overexpose themselves too early in a company, which means when they are trying to dollar cost average into the company after that and lower their average cost basis, they're overexposing themselves unnecessarily to this company, which adds a large amount of potential risk of future losses, because even now, the company could still continuously trend downward until it finds a bottom or a fair valuation. But because this is a growth company, and if you are a long-term investor, then yes, technically you could buy now and hold for the long term, which is exactly what I did. I already have basically a max allocation to this company, so I don't plan to buy more or average down my average cost. I plan to just forget about this company and move on to the next big thing, while also continuously dollar cost averaging into my core investments, which are made of ETFs such as VOO and VTI. Those are my bread and butter ETFs that have low expense ratios and also are basically guaranteed to build wealth over the long term with very, very little risk. Now, lastly, we're going to go over why an extremely bullish author has actually doubled his position in Palantir Technologies, and we're only going to be going over the summary of this because I don't want this to be an extremely long video. First, he points out that Palantir is a great buying opportunity right now if you plan to hold for the next decade, and I actually agree with him here. I myself own Palantir, and I plan to hold this for literally my entire life. He also points out that they have remarkable growth opportunities, and their earnings potential is literally right now just locked. In a previous video, when we talked about stock-based compensation, I said that if they stopped base compensation right now, the company would literally become profitable overnight, and that is actually a true statistic. Feel free to either watch that video or look it up yourself. Next, the author points out that the company's share price has dropped by around 84%, which is a huge discount. And again, like we said, that doesn't necessarily mean it's a good buying opportunity, but it certainly means that it's definitely a better buying opportunity now than it was back then. And lastly, of course, He says, I don't understand what investors are waiting for. I'm doubling my position right now. So he is extremely bullish on Palantir Technologies. But remember, think through this. Don't blindly follow financial institutions, reporters, analysts. Do your own research, your own due diligence. Make sure it aligns with your risk tolerance, your investing strategy, and always make sure to weigh the pros and the cons, the risk to the reward. Make sure you understand the company, what it's doing, and what it could be. But I would love to hear your thoughts down below. Remember to go and smash that like button for more videos like this one, and I will see you in the next YT video.